It's taken 9 years and the Bank of Japan supersizing its balance sheet to the $5 trillion mark, but Asia's second biggest economy finally has some inflation. Officials in Tokyo are realizing the hard way, though, that it's best to be careful what you wish for as bond yields spike. Granted, the gains in consumer prices Japan is reporting are negligible compared to those in the U.S. and China. And inflation is still a good distance from the BOJ's 2% target. Still, the 0.5% rise in consumer prices in January year-on-year is already unnerving the bond market. It followed a 0.8% jump in December and marks the fifth straight month of increases. The worry is that Japan's inflation is the bad kind. Haruhiko Kuroda was hired as BOJ governor in March 2013 to end deflation. Kuroda unleashed tidal waves of liquidity that drove the yen down 30%, generated record corporate profits and sent Nikkei 225 average stocks to 31-year highs. Yet even after swelling the BOJ's balance to the point where it topped gross domestic product, inflation remained elusive. The reason, a dearth of bold reforms left corporate CEOs timid about hiking wages or investing big in new innovation. Then came COVID-19. As economies reopen and supply chains go awry, global inflation spikes are zooming Japan's way. Surging costs of energy and other commodities have Japan importing the inflation the BOJ hopes to generate organically at home. And bond traders don't like it. In recent weeks, yields on 10-year government debt rose to a 6-year high of 0.2%. This won't seem problematic, considering comparable U.S. Treasury securities yield 1.93%. But then Washington's debt is nowhere near the 250% ratio to GDP that Japan faces. Nor is America's population shrinking and aging at troubling rates year after year. The rate spike was enough to catalyze Kuroda's team to smooth things over in Tokyo's $12 trillion public debt market. Earlier this month, the BOJ intervened to enforce its yield curve control policy for the first time since 2018. For this, there are two clear takeaways. 1. The idea the BOJ will be tapering anytime soon is rather fanciful. 2. Japan's bond market could become a bigger risk to global financial stability than investors realize. The first debate was a lively one just a few months back. At the end of 2021, indications were that Japanese GDP was stumbling back toward pre-COVID levels,